Hi everyone, it's David Judge and Daniel Brittain from Morrison Kleeman Estate Agents, and we've got our special guest here, Daniel Hustwaite from Aqua Financial in Eltham.
Thanks for having me, guys.
Mate, you're a very special guest and a very good friend to us at Morrison Kleeman, and very valuable from our point of view, always in terms of the financial world. So today we just wanted to run through a little bit about some relevant pieces today. You know, the 5% to first home buyers, the interest rate cuts and how that's affecting, and a little bit about broking yourself. So I guess a good start would be just a bit about your background and your history and Aqua's history as well.
Yeah, no, guys, thanks for having me along. I suppose just to give you a bit of an idea on how Aqua started, we started it back in 2011. Just started off quite small, and we've grown organically over the last, 15, 14 years. Prior to that, I was working as a broker, but for another business, and then before that with ANZ Bank. And I probably wanted to have a crack at this simply because I could see a niche in the market where it's probably sad, everyone's probably experienced it, but service from the banks directly can be pretty ordinary. You know, long wait times, you never get to talk to the same person. And when you're dealing with the biggest transaction of your life, having someone there to facilitate the process, I just saw a real need for a strong customer service type of person to broker the deal between the bank and the customer.
Excellent. Yeah, I couldn't agree more. Even from our industry as well, service is key. And having that relationship with someone you know and you can trust is invaluable. So I'm sure you have clients that come back to you time after time, year after year, and referrals and such. Yeah,
we've been lucky with that. We've certainly we pride ourselves on the customer service aspect. You know, it's daunting, paying deposits of, $100,000 when you're transferring that sort of money and then settling on loans for $500,000 and that sort of thing. It's nerve-wracking for customers. It's funny, I went through the process myself, buying a place only about 4 weeks ago, and I was nervous.
Yeah,
and I do it every day of my life. So having that person there that you can talk to consistently throughout the process makes all the difference.
Yeah. What's for those out there who are dealing with banks and brokers, what's the benefit of using a broker rather than someone at a bank?
I think certainly service, what we just touched on then. You can always call me, whereas calling through to banks at call centres and things like that can be challenging.
Yeah.
One of the other things is policy, right? So because we have access to many, many lenders and many, many options, different banks do different things for customers, right? So, for example, if you're self-employed, the old-fashioned self-employed policy is 2 years financials, and the bank look to average that out or take the lower of whatever the 2 years looks like. But someone like ANZ, quite a few years ago now, pioneered 1 year's financials for self-employed people, right? So if you've got 1 year's financials or you've had a really strong year, then talking to a broker and knowing the bank's policy is going to enhance, 1, your borrowing capacity, and 2, your chance of approval. So it's us having access to so many products and so many different policies that'll work for customers.
So then you can recommend the best lender.
Definitely. Yeah, because rate's always important, right? But sometimes, rate is important, but sometimes it's not the most important. Sometimes getting the loan and having it approved for a slight extra cost makes all the difference.
Yeah.
Well, I know from our point of view with, commission-based is always something that's why I go to brokers as well. It's so important, isn't it?
Yeah.
Not every bank loves someone on commission.
No, that's right. And it often can depend on what time of year that you're applying to when you're on commission, right?
Exactly.
Because banks like to see sort of 3 to 6 months year to date information on pay slips. And obviously you can't provide that, in the middle of July because the pay slips reset as of the 30th of June. So, yes, that's where we can help too. And
what have you found now the ratio between people that will go to a bank versus the people that will go to a broker?
Well, I think now it's something like 73 or 74% of all home loans in Australia, or loans in general, being home loans, investment loans, that type of thing, are written through the broker channel.
Wow. So big change in that industry. Yes, geez.
Massive change.
Now, August was a big month. We had a couple of big announcements. Firstly, we'll start with the interest rate cut.
Okay.
What are interest rates looking like now?
Well, look, a good home loan interest rate, there's so many different tiers in interest rates, right? It's hard to quote. 10 years ago, I could just rattle it off simply. But now we have different rates for principal and interest loans, interest-only loans, loans with high LVRs, 80% plus, loans with low LVRs. But a generic loan of $500,000 and 80%, principal and interest home loan, you're looking at about 5.3% now off the back of that last rate cut. So they're coming down. In addition to that, if you're looking at fixed rates, they're now in the high fours.
Jeez.
Okay.
Right. So I'm not saying fixed is the right thing to do right now because we may get some further rate cuts. But just goes to show that if the fixed rates are a fair bit below the variable, banks are almost factoring in future rate cuts as well. So just keep that in mind.
Do you think we'll get another rate cut at some point later in the year? I know there's talk about November. Do you think that will happen?
I reckon November at the earliest.
Yeah.
You know, the inflation numbers were a little bit higher a week after they'd cut the interest rates in August. That may pause things a little bit, but I think, yes, we'll see one. But
So likely one more.
probably,
Yeah.
my guess.
Okay. Getting back to your moment there where you mentioned fixing your rate and your variable. Do you recommend a fixed rate or half and half, or what's the best way to go about it?
Oh, look, it's a bit of preference. Probably right now with future rate cuts probably on the horizon, I don't think fixing's quite the right time.
Okay.
Right? The problem is with fixing, if you get it wrong, the banks will penalise you to break the fixed term. So if you fix it for 2 or 3 years at a certain rate, the variable drops below that and you want to change out of the fixed into the variable, banks will penalise you.
It's like a phone contract in a way. You got to pay it out or pay a fee or
correct.
Just
Right.
a lot more expensive.
Yeah, so fixing now I think is a little bit of a gamble, but there could be opportunity for that
At some point in the
perhaps
future.
next year.
Yeah. Okay. The other big announcement we had as well with the government was around first home buyers and the 5% deposit.
Yes.
Yeah. Can you talk us a little bit more about that one? I know
Yes.
we spoke about this in our meeting the other day, that although it's 5% and it looks great, people don't take into account stamp duty.
Correct. So that's a good pickup because as soon as you see this advertised in the paper, it's just 5% deposits, all you need to buy a house.
Yep.
Right. Now, that is the case if you're a first home buyer and buying for $600,000 or less because you're also exempt from stamp duty, right?
Yep.
But as soon as you go over 600,000, yes, there's concessions up to 750 as a first home buyer, but you will still pay stamp duty.
Yeah.
Okay. So the biggest shift in that is that what's happening now, prior to 1 October, right, so currently, right now, you can purchase a property as a first home buyer under the scheme up to $800,000, and there are income caps also in place on people that are applying. As of 1 October, the income caps are gone.
Ah, really?
Scrapped.
Yes.
Is that singles and couples?
Both, yep.
Both.
So
Wow.
no income restrictions.
Yep.
And the second thing is the purchase price goes from $800 to $950.
Okay.
To qualify.
So there's a slight
Jeez.
change. Okay.
Right, so it's going to open up a lot more. There's going to be a lot more applicants, and there's going to be a lot more people that will qualify for this scheme.
Okay.
So I think it's a great thing.
It's
It's
fantastic.
certainly going to drive more inquiry.
Definitely.
Yeah.
Well, I had a buyer last week at an open first home buyer, and he came through and he was saying, I need to buy before the 1st of October, before this scheme comes into
Yeah.
play, because I'm really worried that it's going
Price
to
is gonna
take
go
off.
up.
Correct.
Yes,
Yep.
there is the risk of that happening.
Absolutely.
Yes, but it's also going to create more opportunity. There'll be more people that will be
Yeah.
able to get into the market under the scheme. But just before we touch on that, so just as an example, if you buy for $800,000, you've exceeded all the stamp duty stamp duty concessions. Thank you. So if stamp duty on a property of 800 is probably circa. What is it? It's probably circa about $45,000.
Yep.
So you need 5% of 800, which is 40 grand, right? Plus the 45 in stamp duty. So that's where the articles can be a little bit misleading.
Yes.
Yeah. So they just mentioned the 5%, but they never
Yeah.
take into account the stamp duty.
Correct.
Yeah,
If it's
okay.
applicable, depending on where you're sitting as a purchase price.
Yeah. Now, in terms of interest rates, who would be your sort of top 3 lenders at the moment that you recommend?
It's pretty competitive. There's not a lot of cashback options. Cashbacks were when lenders were enticing you to take out
switch
loans
over,
with
yeah.
them.
That,
They
yes.
might offer 2,000, 3,000. They're all doing it. There's not a lot of those left.
Yes,
There's
okay.
2 or 3 left. But in terms of the best lenders, probably really competitive lenders. It does vary depending on the loan to value ratios. Some are really good at 50%, 60% loan to value ratios, and then they're not so good at 80 or 90. And then there's other lenders that'll fill that gap. But specifically, probably on a loan of around 70 or 80%, 500,000, ING super competitive.
Yeah.
Really competitive.
Yeah.
They can be a little bit stringent on their policies. You know, they don't have as lenient policies as some of the other lenders, but for a very straightforward transaction, they're excellent.
So ING is a good one. Yeah.
ING's a good one. Macquarie's very good too.
Yeah, we see Macquarie a bit as well.
Yes, so Macquarie have a really good automated system and a way in which they assess applications electronically.
Now, you mentioned this on Tuesday morning.
Okay.
When we all caught up. Some of these applications you're getting approval within 4 to 6 hours.
Yeah, correct.
That's right?
Yeah, that's true. That's true, right?
That seems unbelievably quick.
It is. And look, it doesn't happen all the time, but if it's a very simple, straightforward transaction, yes, it can be turned around that quickly. If, that's got to be a low loan-to-value ratio where banks are just doing automated valuations that come back automatically.
So no bank file required at the house.
Yep. Correct. They still do one, but it's all electronic.
Yep.
Right? So it's very much instantaneous. So, yes, there are turnaround times like that. And then the other third lender at the moment, it varies quite a lot. But Bank of Melbourne's very good at the moment. The Westpac Group, we use ANZ a bit, NAB, CBA.
Yeah.
See, all those lenders are the ones that participate in the scheme. So if we've got someone doing a scheme, ING don't participate in the scheme, so we don't have that choice.
Okay, yeah.
Neither do Macquarie, neither do ANZ.
Yep.
But companies like NAB or banks like NAB, CBA, Bank of Melbourne, Westpac and those, they all participate in the scheme, and we see a lot of those clients that want to go on that scheme.
So there's some good options out there for
definitely.
for people at the moment.
Definitely. Yep. And plenty of options too.
You're finding now that people are not going to their bank. You talk about that sort of ratio now. Over 70% of people go to brokers. It's just amazing now. You go to you and you've got 5 or 6 where you just go to your bank and you've got one option. And some people, I found over the years, went to their bank just because they were loyal and very much, I've banked with this person for years and years and years. But you might miss out on a really good deal or...
Well, I think so. I think people are a bit more savvy now. If I said to my mum, go somewhere other than NAB, she needed to borrow money, I think she'd have a heart attack.
Yeah. Same with my mum.
It's just the way it is. But now we're a little bit smarter in the way in which we shop around and we want to save money.
Yes.
And there's no better time to want to try and save money with the cost of everything else in this world.
You hear a lot of people put in the too hard basket. Yep. So I've had my loan with ANZ for the last 5 years. Yeah, everything's going fine. I'm happy with the rate.
Yep.
Getting back to that, how often should people be reviewing the rate?
Yeah, that's a good
And if you were going to make a change, is it fairly straightforward, or is it a pain in the butt that people think, or is it not so hard these days?
Okay, well, it's a good point you make, right? So you don't necessarily have to change to always be on a reasonable deal. Banks will review your loan. They look at what competitors are offering out in the market, and they may give you a reasonable discount or extend the discount or slightly increase the discount throughout the journey of your loan. But you have to ask.
Yeah.
They won't do it.
They
won't do it on their own. And that's, again, a niche of a broker is that we will do reviews of that loan automatically for you to make sure that it's still competitive.
Yep.
If not, then we'll instigate the discussion around perhaps a refinance. It is like applying for a new loan. Right, so it is ID, pay slips, bank statements, all those types of things. So it's not simple, but it's worth it, right?
It's worth it, 100%.
In my opinion, it's definitely worth it because you might save, $2,000, $3,000, $4,000 a year in interest.
Yeah.
It ends up being a heck of a lot of money.
So should you do that every 12 months or how often?
We review your loan every 12 months and banks are reasonable at retention. So generally they'll offer you something that's good enough to stay.
Yeah.
But it gets to a point probably 6, 7 or 8 years down the track when those discounts do start to...
That's when
they're not as good.
There's better options.
Yep, there's better options out there.
Yeah, okay.
Yep.
Are they still going as detailed? I have a few friends that have said, they want to know... how many times you buy Uber Eats and how many times you're going out and things like that. Are they still being as
not quite
diligent? Okay.
No, not quite. It's not like it was 4 or 5 years ago when they'd actually go through the bank statements and we'd have to do it on behalf of our clients as well and actually pinpoint discretionary lending.
Wow.
No, it's not quite as bad as that anymore. No,
Yes.
it's a lot easier.
Good. I'm glad
that's
to hear
good.
that. Yeah. So we were talking earlier about first home buyers and the scheme, the 5% scheme. What's another way for first home buyers to really be able to compete and get into the market? Not a conventional way potentially as well.
Yeah, good question. So the other option that we see more and more of now, because the biggest challenge is saving the deposit a lot of the time, right?
Yes.
Because you might be a first home, but you might be lucky enough to still be living at home, but you could be renting.
Yeah, correct.
Right? So it's that money's being diverted away from potentially your deposit. So what we see is we see parents help out a lot. And that's not necessarily by just gifting money.
Yes.
If a parent has equity in a property, what you can do or what they can do is they can be guarantors. All right. So a guarantor can't help a customer with the servicing of the loan. So it's got nothing to do with what the guarantor's earning. They can't help with borrowing capacity.
Yeah.
The borrower has to be able to fund the loan off their own income.
Yep.
Okay, but what they can do is they can put up equity that they have in a property, right? So it might look like customers trying to buy a home for $600,000 wants to borrow $600,000, right? So they don't have a deposit. The bank will lend $480,000 against the property that the customer's purchasing, and the balance being $120,000 is what the guarantor puts up as equity on their property. So the bank will take out a mortgage over their property or a second mortgage behind the lender that the guarantor might be with, but it just simply avoids the need for the customer to look at saving up for a deposit. So that's very, very common.
And that's very important if you're talking about servicing. You don't have to, they're not helping on the servicing.
Correct.
So
Yeah.
would that mean potentially if they, mum and dad is retired, for example, but they've lived in their house for X amount of years and they've got equity, could that be something they could use, or do they need to be working still? Or?
Okay, different policies from different banks.
Yes, okay.
Okay, so the best, and from my experience, the easiest lenders to work with when parents are putting up the home as a guarantor is someone like ANZ, Bank of Melbourne or Westpac.
Yes.
Then you've got CBA who do have a few little niches around that, like they don't like the guarantor using their principal place of residence.
I was going to ask you that. Does it matter if it's principal or investment property?
Again, policy,
Yeah,
right?
okay,
Depends
yes.
on the bank.
Yeah.
So, like I said, from my perspective, as long as their rates are still really competitive, I look generally to go with, ANZ, Bank of Melbourne,
Yes.
Westpac. They've just got a really good system for that. A couple of other banks will do it, but like I said, there's a few little things. Maybe
Yeah.
the guarantor has to be working, can't be on their own home, can't be on a pension, a few little things like that.
Yes.
But there's
Yeah, okay.
plenty of options again, and I think that's where chatting to a broker is important.
Speaking to you today, certainly the amount of wealth of knowledge you have in different banks and their policies, you can see why you'd go to someone like to you, for example.
Yeah.
It's so important and so valuable to make sure that they're getting the right, as you said, it's not always the rate, it's all the other parts that come into it as well.
Yeah, you're dead right. And it's chatting to a broker just will mean that you're likely to get your loan approved first time.
Yes.
And I know we're going to talk about credit score.
Yes.
And if you're starting to do
that's
multiple
coming up.
applications because you get things wrong,
Yep.
and you have all these credit inquiries and hits, now you need lots of them,
Yes.
right?
Yeah.
A couple here or there is not a problem, but it just doesn't hinder or potentially hinder your credit score either.
Yes,
Yeah.
okay.
Okay. Well, we'll just go straight into that then. Credit
Okay.
score.
Yes.
Well, I know we spoke about this again earlier in the week.
Yep.
Can you give us more information on why your credit score is so important these days?
Definitely. Now, this is something that's very, very relevant right now. Every time we lodge a loan application on behalf of a customer, the banks are checking their credit score. They're making a decision often on whether or not they will lend to you or not based on that score,
Jeez.
Okay.
right?
Wow.
So that score is super, super important. It's very easy to get your credit score.
Yep.
You can get them off the internet, piece of cake. But what you want to do is you want to look after it. And what I mean by that is that there's this thing called comprehensive credit reporting. What that means is that most places where you've got some sort of loan facility, we use a credit card, for example. Say you've got a credit card with NAB. They are reporting the conduct of that credit card through to the credit reporting agencies that are then noting down how consistently you're making those payments. Now, if you're making those payments late, that's being reported, and it's on a 24-month rolling update, right? So if you made a late payment on your credit card and it was reported this month, it's going to stay on there for 24 months.
Jeez.
Now, one or two you'll get away with, especially if you fix it up very, very quickly.
Yes.
Yeah.
But if there's a pattern that starts to form here, that's going to dramatically reduce your credit score. All right. And banks, when you lodge the application, like I mentioned, are checking that the minute that you hit submit on the application.
So those, for buyers out there who are doing their own research on their own credit score, where do you want to be? What's your bracket on to be pretty comfortable with your credit score?
Look, you want to be over 700.
Yep.
There's a little bit more lenience in that. Some will look at loans over 600.
Yep.
But generally it's on a scale and you'll see it. It goes from red to yellow to green. You want to be in the green, right?
Yeah, that's correct.
Yeah.
And anything over about 700 is going to be okay.
Okay.
Yeah, okay.
Now, getting back to first home buyers.
Yep.
We're now in spring.
Yes.
Spring's typically the busiest time of the year for us. A lot more
Yep.
properties, a lot more auctions. First home buyers historically don't like bidding in auction. And a lot of the advice they get from their brokers is make an offer subject to finance, which you can't do for an auction.
No.
What's your advice for first home buyers on that front?
Okay, firstly, if you're a first home buyer, you want to be prepared to bid at an auction. Make sure you've got a pre-approval and make sure it's a proper pre-approval.
You talked recently about verified approval and the difference between
Yep.
that and can you explain that a little bit more for buyers?
So what we can do is when we hit submit on the application, the bank checks the credit scores, and it's all computer generated, right? And within about an hour, we can have an email back saying it's conditionally approved.
Jeez.
Okay.
But it's not hit anybody's desk. No one's looked at the pay slips. Even if we as brokers, being human, if we've typed something in wrong, that's not going to be picked up. So the pre-approval process should normally take 2 or 3 days.
Yep.
You'll have to wait for it to be picked up by an assessor. They'll go through your living expenses, check your income details. And income's really important, especially with commission and things like that.
Yeah.
Our interpretation might be slightly different to the way the assessor interprets it. And our interpretation's not going to get the approval. Yes, we can go into bat and argue. But you want to make sure that you've had a pre-approval issued where everything's been checked.
Yeah.
Okay? And then based on that, you can go and attend an auction. The real risk for you bidding at an auction is if the valuation comes in less than the purchase price. Now, touch wood, we've been very lucky that generally speaking, when you're buying through a real estate agency on an REIV contract or a proper contract, it's classed as an arm's length transaction and valuations will stack up. You do have some issues with valuations in inner city CBD properties and country properties. Okay? But generally speaking, in metropolitan Melbourne and the area that you're working, the valuation will confirm purchase price.
So when you say inner city, is that more apartments? And I know we're talking about square footage of apartments and they have to be over a certain amount.
Yeah.
Are they 40?
Can
40
be
square feet, is it?
Yeah, 40 square metres.
Yeah, 40 square metres.
Yep. So that's the general rule. There are banks that will do it for less than that, and there are banks that want to see 50 square metres. So
and that
that's just the
includes your
general rule.
garage, does it?
Good question. Again, that's bank policy. Some banks will include balconies and garages and courtyards. Others won't.
Okay.
Right. So that's another one where you'd like to chat. I think it's important to talk to your broker on that front.
So getting back to buyers, if there's an auction happening next Saturday, how quickly, if everything's done properly, how quickly can you be pre-approved, knowing that everything's been done properly?
Yeah, look, you want to give us. Okay, it'd be nice to know on the Monday that you're going to go to the auction of that week.
Or the week prior.
No, that week that you're going to auction, or you'd like to go to an auction on the Saturday. That gives us a full week to organise it. That should be enough.
So 5 business days, you're pretty confident.
Generally, yeah.
That's still pretty quick.
Very quick. As long as the customer.
Yeah, I would have thought up to eight business days or so.
No, look, we went through a period 2 or 3 years ago where banks' turnaround times were slow. Banks are pretty good at the minute now. Again, it does depend on the bank. Some will have a different turnaround time for a complex type of transaction where that person might be self-employed, have companies, trusts, and that sort of stuff. That may take longer.
Yeah. Okay.
Right. But at least, generally speaking, if we speak to you on the Monday, we can have it pre-approved Wednesday, Thursday.
You can be at the auction
and
then.
You could be ready for the auction.
If you get someone, say, gets their pre-approval, bids at auction, and the settlement's in 60, 90 days, can you still shop around for better rates in that time?
You can do. Once you've got a pre-approval, you don't have to accept it.
Yeah.
Generally speaking, though, we're doing a pre-approval with the bank that's the best fit
for
you. So it's not often that you would have to change. But no, there's no cost or obligation with a pre-approval. You can move if you would like to. Yep.
And how long do the pre-approval last for generally? Is there a time?
Yeah, generally just again, banks are a little bit different on this, but just put a circle around 90 days.
Okay, yes.
And then you can roll them over again with updated income documents.
Yes.
Obviously, that's not the case with self-employed because they're only doing tax returns every 12 months. But just put a circle around 90 days.
So 90 days, and if not, then you've got to get pre-approved.
Yeah, and the other type, when interest rates were increasing, if we had you pre-approved at your limit, then we'd have to address that upon the expiry of the pre-approval because your borrowing capacity will have shrunk because rates have gone up. Now, with rates falling, your borrowing capacity is increasing. It works the opposite.
The other way. Yeah, great.
Yep, correct. So what we had you pre-approved for at one point in time with rates coming down, that may increase the next time we roll it over or review it.
Well, that's good news for buyers.
It is, definitely. Yeah, because borrowing capacity has been a big challenge in our industry.
Absolutely. For a long time.
For a long time now. So when there was, a fair bit of investigation into our industry and the banking sector, or the lending part of the banking sector, banks have been putting on significant buffers on top of what the actual interest rate is, sometimes as high as 3%. Jeez. So if your loan's 5.5%, they're assessing your eligibility at 8.5%. So borrowing capacity has been, so a customer does their numbers on paper, works out their payments at their actual interest rate. It looks like they can afford it, you see.
Yeah.
But it's not how the banks assess eligibility.
So how is the best way for a purchaser to try to work out the borrowing capacity? Is it just going onto the websites and doing your calculators, or how would you do it?
I wouldn't do it like that. No, look, it's going to give you a guide. Again, this is another phone call that I'd be making to a broker. We have software platforms that can actually compare customers' borrowing capacities from all the different lenders, and it's accurate.
Yeah.
Right? If you're a customer and you're just putting your details into an online calculator that might be with one of the lenders or the banks, I find them not to be overly accurate.
I could imagine that happens a lot to you as well. I've gone check this, and this is my pre-approval amount that I think I can get, and they come to you when it's a difference. But
generally, they're higher or lower?
No, generally we're lower.
Yes. Yeah. Just that accuracy that makes a difference, isn't it?
Correct. Because you've got to have buffers. The banks are putting buffers on not on the loan that you're going to take out.
Yep. Yeah.
They're also putting buffers on commitments that you've already got.
Yes, so true.
So, it's better off just talking to someone like us or your preferred broker to get an indication on your borrowing capacity. It doesn't take us long to do. It's not hard.
Yeah.
It's worth the phone call.
So we speak to a lot of clients day to day, and a big part of our market is someone that's maybe lived in their house for a period of time, quite a long time. They've probably got equity in it, and they're looking to downsize. And it's really difficult because we find they can be more asset rich versus cash rich. Do you have any recommendations for those type of clients that, okay, well, I need to sell first in order to buy and free up that money, but I can't quite marry that up?
Yeah, so generally there's probably your slightly elderly people.
Yep.
They probably don't want to sell first because they're worried about where am I going to go?
Exactly.
Yeah.
Yep.
And that's a stress for them.
Yep.
So you probably need to look at some sort of bridging finance.
Yes.
And there are lenders that do it. It's been one of those things that people have been afraid of.
Very afraid.
Oh, they always hear, it's so expensive, it's this and it's that. Whilst it can be expensive because you might be borrowing the full amount on the new purchase, it's only for a short period of time, right?
Yes. Yep.
Might be for a month, might be for 2 months, might be 3 months.
Yep.
Now, the interest rates that you generally get on bridging finance aren't the discounted rates. You're generally going to pay the bank's standard variable rate.
Yep.
All right. So instead of paying 5.5%, yes, you're going to pay, call it 8%.
Yep.
All right. But again, once you work it out as a daily rate, the peace of mind of being able to move in, get your everything, all your ducks in a row, and then stage your house for sale, you're probably going to get a better price for your house anyway that'll compensate for the bridging finance cost,
less
right?
stressful as well.
Totally.
Or worst case, even if they were to buy the new home, have a longer settlement, get their property on the market.
Well, that's right.
The difference might be 30 days. Maybe a touch more. So as you're saying, it might be only 30 days, a month or two that they're paying the bridging finance.
That's right. And you only pay for the period that you've got it.
Yeah.
Right. So the bank might approve it up for 6 months or 12 months.
Yep.
But if you only have it for a month, you only pay for it for a month.
Yeah.
Is there a setup fee for bridging?
Some banks charge, look, not every bank.
Yep.
But some banks probably about, I don't know, I'm just trying to think now, probably, I don't know, $600 or $800.
Okay.
Something
it's a lot
like
less
that.
Than I thought.
Yeah, no, you're not talking thousands and thousands and thousands. No.
Yep. Okay, that's good.
First home buyers again.
Yep.
Government schemes.
Yep. Okay, so you've got the one that we talked about, the 5% scheme, which is all the rage at the moment because of the increase in purchase price and the removal of the income thresholds. You've still got the first home owners grant. You don't hear about that much anymore. That's for new homes or build.
We probably see more with the government one.
Yes,
definitely.
Yeah.
Yep.
Yeah, I can't remember the last FOG form we call it that we filled in on behalf of a client.
Yep.
I don't know why. Maybe land and build is not quite as popular as it was with the cost of building.
Probably,
I'm not sure.
Yeah.
But you've still got that 10,000 grant. Okay, you've got this one, the 5%. What else do you have? You have there is a super saver scheme where you can salary sacrifice a little bit into your super and then take that out, and it only gets taxed at your superannuation rate. So that's pretty good. We don't see a lot of that, but it is available there. What have I missed? Okay, you've got the shared equity scheme. Now, we as brokers can't write those loans, but that's a good scheme too, right?
Yes.
That's a scheme in which the government owns a percentage of the value of your property. All right, so that's another good one. That's if you typed in shared equity or home equity scheme, you'll get all the details on that.
Yeah, we tend to see that one a little bit more, especially over the last 12, 18 months.
We can't write those as brokers. No brokers can do them. And you've got restricted lenders that you can go to.
Yes.
I think Bendigo, Bank Australia, maybe CBA, and I think there's another one there.
So there's a couple, but not all of them.
Couple, but not all of them.
Yeah.
Yep. There's that scheme. And then there's also the one for single parents.
We did discuss this on Tuesday. Yeah.
So single parents can buy with a 2% deposit plus stamp duty if it's applicable. So same theory, same concept as what we talked about with the 5% deposit.
Yes.
Yep.
But the bank will lend that person up to 98% without mortgage insurance.
Okay.
So
now again, is it specific lenders or is
same
it
as
only
the
a couple?
5% scheme, right? So like I mentioned, not ING, not Macquarie, but your NABs, your Westpacs, your BOM, Bank of Melbourne, CBA, they're all fine.
Yeah.
Yep. Okay. So many of options for that
there's some good options out there.
Definitely. I can't think of any more schemes, and I apologise if I've forgotten any.
I think we've covered a lot. Yeah, we've covered fair sign buys. Obviously, interest rates coming down.
Yeah.
If anyone downsizing who wants to typically buy first. Obviously, with the bridging finance.
Yep.
I think we've covered.
There's a few myths that I'd like to cover.
Oh, here we go. Okay.
Yeah.
Let's see it.
No,
Let's hear 'em.
there's just a few that I think that need to be rebutted, and very much I think there's probably two that I think of, and people ask friends of mine, and the first one would be as a broker, a lot of them say, well, how does a broker get paid? Because I don't want to pay a broker on top of what I'm going to pay for my loan, and that's a very common question that I get when I recommend brokers.
Yep, good question. So I still get asked that.
Yep.
Right. So I can only talk on behalf of Aqua Financial Services. So what we do not charge for our service.
Yep.
And I think most brokers are the same.
Yep.
But we do not charge for our service at all. We are paid a commission from the bank that we recommend to the customer. We then get asked the question, well, do banks pay different commissions? The answer to that's yes, but it's very, very slight.
Yes.
And it's just not worthwhile going to one that might pay a whisker more. It's just not worthwhile, right? They're almost all identical. So the answer is no. The banks pay us directly for introducing the customer to them, and it's not added on to their loan in any way, shape or form.
So it's bank to broker.
Correct.
Okay.
Correct.
Yep.
How else could I describe it?
Yep.
There's not a lot of bank managers out there with branches being closed and everything like that. We sort of have replaced the old-fashioned bank manager that might have sat at your bank.
That makes sense.
And that's how it works. So it is a completely fee-free service at Aqua Financial Services for the customer.
That's one thing I have noticed as well. You go into your bank, and it's really hard to get a meeting or an appointment with your bank to talk about a loan. You've got to book well in advance.
Yeah.
And as you said, you can't always talk to the same person. So again, that personalisation I think is really important.
Definitely. And I think that's why now about more than 70% of the loans are done through brokers. We're just a bit more flexible in that. And the banks have adopted to that. They've adopted to accommodate the broker model.
And the best part, as you're saying, with so many schemes out there these days, to have the one point of contact, but to be able to walk you through every different option.
Absolutely.
It's not as easy as just walking in. You've got, here's your lender, you're done.
Correct.
You've got all those options. You want to be able to go through it with someone like yourself.
Definitely.
Who can give the right advice. Because as you said, sometimes the best rate isn't the best lender.
No, that's right.
Everyone is tailored differently.
Correct.
So I think, the benefit of using a broker far outweighs
definitely.
just using a bank.
For sure. What's the other myth?
Well, the second one, you've kind of touched on it, to be honest, and you probably have rebutted it a little bit anyway. But it's around, you go to a broker and you think, does that broker have a relationship with that bank?
Oh, okay.
And
the kickback.
they always, kickback. They're going to refer
kickback.
that bank each time. And that's that, am I going to get the best deal? Is that sort of myth?
Yeah, look, we as brokers have to provide, we've got to comply with what's called the best interest duty, right? So we have to provide 3 or 4 of the best options to our clients and ultimately let them make the choice.
Yeah.
Right? So it's really got nothing to do with that.
Yes. Okay.
20 years ago, 15 years ago, things were a little bit different.
Yes.
But now with all the regulation in place and the way in which we have to comply with that regulation, pretty much protects the customer in every instance to make sure they're getting the best deal. And if it's not the best interest rate because something the client wants the loan to be approved, and they have to pay a fraction more based on the policy with the lender, then we display all that and have to disclose all that and discuss all that with the clients. So they're very protected with this best interest duty that we have have to comply with.
I don't think there's any other myths that I've heard.
No, I think you covered it for me.
No.
No.
Yeah, they're the two main ones I keep hearing. So that's good. You've certainly rebutted those.
No. We get asked them from clients every day. Well, not every day, but quite often.
Yeah.
Well,
Dan, you've been a wealth of knowledge, mate, and we're so thankful to have you on the pod today.
No, thanks for having me.
Thank you. Thanks for coming in.
My pleasure. Anytime,
Hope everyone
guys.
find that information helpful.
Absolutely. And certainly Aqua's been a good trusted friend, and yourself, and
Thank you.
For anyone that, certainly I would recommend speaking to you and the team. And
thank you.
Yeah. If there's anyone in the area who is looking to anything refinancing first home, or downsizers looking to just find out bridging finance, we'd highly recommend they give you a call.
Thank you. Thanks, guys. Thanks for having me today.
No,
It's been great.
Thanks for coming.
Thank you very much.
My pleasure.